Hey everybody, welcome back to FSP Forex Stock Predictions. Hope you're all having a great day. I am the Vortex Trader, and today we're going to be doing something a little bit different, right? We're going to be looking at the simplest, easiest trading strategy you can imagine. Guys, this is very, very, very easy to follow. It has one step. That's it. One step. And how it works is we trade once a day, every single day at the same time of day. That's it, right? There's nothing else into it. We are looking at a certain candle that appears once a day, and if we see the candle, we are going to trade it. That is all that there is to it. Now, how does it work? We are going to be trading the 1 hour time frame on GBP USD. Now, the reason why I picked GBP USD is because I have back tested this pair using this simple strategy. I haven't back tested it yet on other major Forex pairs. And I only trade GBP USD in general, along with Euro USD, on the 4 hour time frame for my order block strategy, and on the 15 minutes for my breakout strategy, and on the 5 minutes using Bollinger Band. So I am quite familiar with this pair. But this little strategy that I want to teach you guys today is something we can even put it along, we can call it, it's a silly little strategy, because it's so simple that most of you will think, this is too simple, I'm not going to do this, this is just kind of dumb, this is stupid, why am I trading like this? Well, guys, trading is supposed to be fun, right? We cannot just stare at our screens all day, every day with a million indicators and lots of price action, tearing ourselves apart, using all these complicated methods. From time to time, it's okay for us to have a little fun, right? And I found that with this one-step strategy, it's kind of fun. It really is kind of fun. So, how does it work? We're on the 1 hour time frame. We are waiting for the US market to open, and the US opening candle on the 1 hour time frame is depicted on this chart by these vertical lines. Now, if you don't have this on your trading view, you simply go to indicators and you type in session breaks. And you will see session breaks right there. There are a few of them. You can choose one. You can customize it to just show you when the US stock market opens. All right. Now, what are we going to be doing? We are going to be doing exactly the opposite of what the opening candle does. So, for example, if the market opens with a bullish candle, we're going to be selling. It's as simple as that. If the market opens with a bearish candle, we're going to be buying. All right, so step one, doing the opposite of what the opening candle does on the 1 hour chart. Okay? Step two, let's define and determine what our risk parameters are. All right, we are going to be risking 20 pips to make about 25 pips, right? So if we were to risk 1% of our account per trade, we would be risking 1% to make 1.25% profit. Now, yes, the risk is higher than the reward. However, the win rate overall is higher with the system, right? So guys, remember, you cannot have, I mean, you can, but it is rare. But it's very difficult to find a system that you can do systematically every single day that has a very high win rate and a very high risk to reward. You have to think of it in terms of probabilities. If the risk to reward is extremely high, the amount of signals that will be shown to you over a given time period are going to be less, right? If the risk to reward is really, really low, and you're risking more than what you're going to be making, your win rate will go up. All right. So wherever you see a green box, this shows a previous winning trade. Wherever you see a pink box, it shows a losing trade. Now this is where we are currently. All right. So yesterday was the 2nd of May. We can see that we had a bearish candle, so we would have lost, right? Simple loser. Fine. The day before, we had a bullish candle. We would have sold, right? Winner. The previous day, and I'm just going over this. There is no need to back test this or forward test this live because the system applies to every single opening candle in the exact same way. Whatever candle we see, we do the opposite. And we open the position at the candle close. So for example, on Monday the 1st of May, when the candle opened, it closed right there. We sold at that point risking 20 pips to make 25, and we could see that it hit profit. Yes, there are ways to secure further profit, absolutely. Now, guys, remember this system, you cannot or should not just treat this as a sole system to trade with. As I was saying in the beginning, use this as a fun system, play around with it. Develop some further confluence that you can add into it to help you get a higher risk to reward, to help you get more winning trades. All right, but for the purpose of this video, we are only aiming for 25 pips per position. So we can see we had a winner here, we had a loser here. Why? Because the candle opened up bullish. If we would have sold it, I don't even need to put a short position tool on there. You can see it just carried on being bullish. We would have been stopped out. The day before, we had a bearish candle. At the candle close, we would have bought. Stop loss close to 20 pips. Risk profit target 25 pips. We would have won. The day before, we had a very small bearish doji candle right there. However, it was bearish, so what's the rule? At the close, we buy. We can see we would have won. The day before, we would have lost. The day before, we would have lost. The day before that, we would have won. The day before that, we would have won. The day before that, we would have lost. The day before that, we would have lost. 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 Won. Lost. Won. Won. Lost. Won. One, lost, one. So you can see, guys, as I'm just going through the days of the weeks in the past, we can see just going through all of these opening candles. I've literally tested every single one of them since the beginning of January this year, going through every single opening candle. So we have quite a bit of data. Winner, winner, winner. Winner, winner, winner. Winner, loser, winner, 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 loser. So, I have the actual results in front of me. I like to handwrite when I'm backtesting, and I'm going to read out to you what I have found. So let me just get back to the present time. There we go. And that is today. All right, let me read to you the results of what I have found month to month from January. Okay, so in January, trading from the 1st, and guys, this is within every possible trading day. Okay, so in January, we had a total of 13 wins and 8 losses. Okay, that would give us, if we were using a risk to reward of 1.2, and I'm saying 1.2 to account for possible spread. All right. If we would have used a risk to reward of 1.2 and possible losing at 20 pips, so now we would be risking 20 pips to win 22 pips, right? So it would be something like this, just to get it closer, right? Then in January of 2023, we would have had 13 wins and we would have had 8 losses, which in a total would put us up 7.6% on the month. Not bad. Not bad, using a silly little strategy that uses no technical analysis, no support and resistance, and no indicators. Purely a simple little buy and sell strategy. That's it. Right? In February, out of all January, February, March, and April, we saw something interesting. We had a record of 6 losses in a row. That was the highest amount of losses we saw in a row. Okay? And the amount of wins we had were 8. The amount of losses were 11. And using that 1 to 0.25 as a RR of 1 to 1.25 at 10%, and a loss size of 1%, we would have been negative 1% for the month of February. That was the only other losing month. January, March, and April were all profitable. It was only February that was very close to break even because it was only negative 1%. March, we had a total of 16 wins, 16, and a total of 7 losses. This would have given us a 13% profit for March alone. April would have been a 7% profit because we had 12 wins and 8 losses. Interesting, right? Interesting how we can take such a silly little concept and prove it to be profitable just by following it systematically and doing the exact same thing day in, day out. So today, I'm waiting for the opening candle. I'm going to be interested to see how it plays out. And whatever it does, I'm going to be doing the opposite. Now, I have not started tweaking this strategy yet because there is a lot that one can do to this silly little strategy to make it more profitable. You can start incorporating support and resistance zones. Important, right? You can start seeing where the candle falls. For example, Monday the 1st of May, this candle opened as at a perfect retest of this price structure right here. Perfect retest. Looking at where previous price structure was, we could have easily waited for price to come back down. So now we're not just doing the opposite of what the opening candle does, we're doing a break and retest. Because why? We saw a break away from previous support, and then we saw a retest back up to previous support. So we had resistance, flipped to support. So this in any case could prove as further confluence for a really nice entry for a trade within itself. And then we could have targeted previous resistance as a target, and that would have given us a nearly 1 to 3 risk to reward. So that already, now we're starting to move into the technical realms where we're trying to tweak the strategy a bit to give us higher profit margins. Right, makes sense, yes? So guys, there is lots to play with, lots to play with. So the point of this video is to show you that trading does not need to be complicated. You can take something as simple as this, taking the opening candle on the 1 hour chart of one pair and simply doing the opposite. You do not need to have a reason why you're doing it. You do not need to have a reason why the price is going to either move against you or move in the direction of you moving. No, this is a systematic, sort of an algorithmic approach to trading, right? And it is a great way to help your psychology, because doing something like this without using your technical minds, noticing where price is and looking at support and resistance zones and putting indicators, without all that, simply doing the opposite of what the initial opening candle does helps us with our psychology big time, because it forces us to take the trade no matter what. No matter what. And the only way to trade successfully is to think in probabilities and sample sizes. So if you commit to the next batch of trades, let's say 20 to 25 trades, no matter what, then you will know if a system is profitable or not. And by doing this, it's so simple, right? It's so simple. You do the opposite of what the opening candle does. You have a predetermined risk parameter set up. You have a predetermined target. You know what it is. You don't have to think about it. This will help you trade with zero fear. So my advice would be practice it on a demo account. It's a lot of fun. It's silly. It's simple. But it's a great way to start building up a strategy for yourself, especially if you don't have one. If you've been looking online, searching for that strategy that works within your personality, maybe this is something that you can build upon, right? Use it as a starting point. Okay, don't use it solely to trade. Remember, guys, this is not for financial purposes. This is purely for educational and entertainment purposes only, right? I'm just showing you something that we can do as traders to calm the nerves a bit. Do something completely silly. Okay? Do something and see that sometimes the easiest, simplest things on the charts are the ones that work. All right. So have fun with it. And as always, I want to thank you all so much for watching. If you do find these videos helpful and you do like the content, please would you go ahead, hit that like button, hit that subscribe button, let us know your thoughts in the comment section, and I will be seeing you all in the next one. Thanks for watching. See you later.